NYCB has come under pressure and this week got a large investment from a private investor group. NYCB, it stands for New York Community Bank. It's a fairly unknown regional bank that nobody really knew about until we had the banking crisis about 12 months ago. If you recall, in early 2023, Silicon Valley Bank, First Republic Bank, Signature Bank, all failed. And they failed due to a bank run situation. The assets in that bank were largely tied to New York City multifamily rent-controlled apartments. The reason that's important is because in 2019, New York City passed a law for this part of the market, which limited the ability of landlords to actually raise rent for those types of apartments. And what that did, obviously, was not intended, but oftentimes these things work this way. It made the value of those apartments lower. NYCB bought a bunch of these loans effectively by taking over a bunch of Signature Bank's business. And what's come to light over the last couple of months is that those assets were actually potentially lower in value than previously anticipated. And so they reported in the first quarter in February that they had to increase their loan reserves, which means that they're basically saying that they're going to have losses that are greater than expected. That put pressure on the stock earlier this year, and it culminated really this week with the stock down at some point 40 or 50%, which caused a group led by Steve Mnuchin, the former Secretary of Treasury under the Donald Trump administration, to come in with $1 billion investment of other private investors, including his own new firm. And the reason that's important is that helped calm down the market. The stock stopped going down and recovered a bit. The other reason that's notable is because Steve Mnuchin previously did this. Before he was Secretary of the Treasury, he had led, during the global financial crisis, an investment into the failed bank Indymac, which he took over from the FDIC, and he rebranded as One West, and he brought it back to health, and then he sold it in 2015 to CIT. So he has a successful track record of doing this, and so that obviously gave the market a lot of confidence that he would be able to do this again with NYCB. Too soon to tell. There's a lot of debate whether or not $1 billion is enough to actually bail out this bank, but it's definitely a notable thing, and I think lots of folks are looking at those assets and trying to see what the value really is.